Okay, Bismillahirrahmanirrahim. Now let's move to our next topic, that is the cost volume profit analysis, or in short it is called the CVP analysis. Okay, at the end of the chapter you should be able to explain variable cost, fixed cost and mixed cost, and what is meant by the relevant range. Next, you need to be able to apply the high-low method to determine the components of your mixed cost. So if you have a mixed cost, how are you going to split that into your variable portion and fixed portion? The technique that is being used is known as the high-low method. The third one, you need to prepare a CVP income statement to determine the contribution margin. Next is to compute the break-even point using the three approaches, and then determine the sales required to earn target net income and determine the margin of safety. Okay, let's look at the first one. We look into the variable cost, fixed cost, and the mixed cost. So let me look into the explanation of the variable cost, fixed cost, and mixed cost, and the relevant range. So first, let's look at what is meant by the cost behavior analysis. So cost behavior analysis is the study of how specific costs respond to changes in the level of business activity. So you are looking at the business activity, the level of business activity, and then how that respond to the changes of your business activity, how your cost. Now we are talking about the cost. How does the cost respond to the changes in the volume or in the quantity or the level of business activity? So some costs change, others remain the same. So this helps management to plan operations and to decide between the alternative courses of action, whether you want to proceed with plan A or you want to proceed with plan B. So if you are looking at the cost, you need to identify, you need to know the behavior of the cost. And then applies to all types of businesses and entities. So the starting point is measuring the key business activities. Okay, the cost behavior analysis is the study of how specific costs respond to changes in the level of business activity. So the activity levels may be expressed in terms of the sales dollar. This one, for example, for a retail company, may be expressed in terms of the miles driven, for example, in a trucking company. And then you look into a room occupancy, that could be the activity level in a hotel, maybe the dance classes taught by a dance studio. So many companies use more than one measurement base. So it's basically looking at the activity level. So when we look into the graph, you will understand this better. Okay. So changes in the level of volume of activity should be correlated with changes in cost. And then activity level selected is called the activity or the volume index. Activity or volume index, so that identifies the activity that causes changes in the behavior of cost. Allow cost to be classified as variable, fixed, or mixed. So you are looking at the, let's look at the first one, that is your variable cost. Okay, to understand this better, what is variable cost? So as the name implies, variable comes from the word, the basic word, that is vary. So what is vary? Something that changes. So costs that vary in total directly and proportionately with changes in the activity level. So for example, if the activity level increases 10%, so total variable cost increase 10%. And if the activity level decreases by 25%, then total variable cost decrease by 25%. So it has a direct proportion with your changes in the activity level. Okay, so variable costs remain the same per unit at every level of activity. So you need to know, for variable costs, you need to know how the cost behave, and then you need to know per unit as well as the total. So you need to know the per unit and the total. You need to understand the behavior. How does the cost behave when there were to be any changes in the level of activity? So for example, Diamond Company manufactures tablet computers that contain a 10 ringgit camera. So the activity index is the number of tablet produced. So here you can see how you are producing tablet computers. And then in that computer, you will have a camera. So that camera, the cost is 10 ringgit per unit. And then what is your activity level or your activity index? So your level of activity is the number of tablets produced. So this one, your X will be the quantity or the unit produced or the tablets that you produce. So that is your X. That is the term that we use is the level of activity. So that is basically, we are saying that if you are a manufacturing company, that will be the level of activity will be the number of unit produced or the quantity of item that you produce. And then as Diamond manufactures each tablet, the total cost of the camera used increases by 10. So if 1 unit of camera that you use, if you have 1 tablet, then you will install 1 camera in that tablet. And that the cost for that tablet is, the cost for that camera is 10 ringgit per unit. So what is the variable cost per unit? So if that varies, that means if that cost varies, it changes with the number of unit that you produce. If I produce 1 unit, the cost is 10 ringgit. If I produce 2 unit, what if I produce 2 unit? If I produce 2 unit, that the cost will be 20. If I produce 4 units, that will be 40. If I produce 6 units, that will be 60, and so on. So that means it increases in direct proportion. Okay, so if your cost increases in direct proportion with your quantity, so that will be that is considered as a variable cost. So you have to understand the behavior of your cost. So if that cost varies with your level of activity, so this one, the x-axis is your level of activity and your y-axis is your cost. So if, let's say, it varies, this one is your total variable cost. This one is your total variable cost. Okay, so if you produce more of that output of that product or that units increases, then your cost will also increase. Okay, and then what about the cost per unit? If you can understand the total variable cost, what about the cost per unit? You just divide. Okay, for example, this one, ignore this one. You can also, if let's say you produce 2,000 units here, if you produce 2,000 units, of course, the cost will be 20,000 ringgit. Okay, if you are working, if I ask you how much is the cost per unit, so that the cost per unit will be 20,000 divided by 2,000. So you will get again 10 ringgit per camera. So if my question is, how much is the variable cost per unit? So your answer will be 10 ringgit per unit. So your 10 ringgit per unit is your variable cost per unit. So it remains constant at 10 regardless of how many units that you produce, the cost per unit. Okay, the cost per unit will remain constant at 10 ringgit per unit. So if your cost behave like that, that is known as your variable cost. Remember, we say that for the variable cost, the variable cost remain the same per unit. Okay, the variable cost remain the same per unit at every level of activity. So you can see here the variable cost remains the same at any level of activity. Your variable cost per unit remains at 10 ringgit per unit. So you need to understand how your variable cost behave. So for the total variable cost, it increases proportionately with your level of activity, whereas your variable cost per unit, it remain constant. So graphically, this is how you do it, how you sketch or how you draw your graph. Okay, hopefully you have a better understanding on your variable cost. So thank you for that.